Welcome, Dr. Kukies. It's a great pleasure to welcome you to the conference. I'd like to ask you a few questions about your assessment on the current state of the European economy, and also your judgment on how the financial system has held up over the last few months. In particular, in terms of your thinking about the next 6 months as you take over the European Council presidency.
Yeah, sure. So obviously the economic situation is nothing short of dramatic. The depth of the recession in pretty much all member states will be the most severe that we've seen in decades, and obviously that aggregates into a enormously deep recession, both at the Eurozone and the EU level. So in that sense, we're in no better shape than the rest of the world in overall growth scenarios. So I think it's impossible to sort of sugarcoat the severity of the overall economic situation. There are some signs that we're bottoming out, and some in the markets are talking about green shoots. Markets are obviously pricing in a enormously fast and very much V-shaped recovery. But of course, we're seeing that whenever there is fear of the second wave, then markets correct quite quickly. So I do think that despite the fact that we're seeing a sort of softer volatility over the past weeks than we saw in the depths of late March, early April, there is still quite a lot of anticipation that things could get worse before they get better. But of course, we're quite optimistic that a lot of the policy action that's being taken, both on the monetary and the fiscal side, and the fact that there is a significantly better coherence of reaction between monetary and fiscal policy instruments, both at the national state levels and at the European level, will get us out of the crisis quicker than after the financial market, after the financial crisis in 08-09.
Thank you very much. You mentioned the actions that have been taken. There have been actions in Germany, across the European Union, and at European Union level. In terms of thinking about the future, a lot of the tools you've had available to you were the tools that were developed in response to the last crisis, the global financial crisis. You mentioned possibility of second, third waves. As you look at that toolkit that was designed, what sort of is your initial assessment as to how well that will equip you for the future? Are there areas you think of the crisis management toolkit that need to be strengthened, or indeed new tools?
Yeah, I mean, I think what has worked quite well is, on the one side, the classic counter-cyclical measures that we have. On the one side, of course, the standard automatic stabilizers, but on the other side, I think what has been working extremely well across Europe is short labor schemes, temporary unemployment schemes. I mean, the one that we designed in Germany was reactivated extremely quickly. Other member states also implemented similar short labor schemes. So I think that was a very, very important reaction to increase the flexibility of the cost base of the real economy, which of course is vital in a situation where basically a large number of sectors go revenue zero or revenues massive down. Reducing costs is enormously important. The second instrument that I think has worked very well, and that has certainly been massively expanded relative to the financial crisis, is government guaranteed lending. I mean, in Germany, we went out of the gates very quickly with that, and announced limitless guarantees for lending programs through KfW and the private banking sector and the public banks and the mutual banks, and that has really been an absolute success, with tens of thousands of companies applying and receiving very, very quick liquidity help through the government guaranteed lending programs. And many other member states are doing that as well. Where we're still working, obviously, and I think that is the aim for the future, is on a common European fiscal response. I mean, obviously, through the lending programs early April, we reached a very far-reaching agreement with 540 billion of loans available. But the outright spending fiscal response, which obviously is something that I hope helped us well in Germany, because we went out of the gates quickly also in a massive spending program with direct transfers. That, of course, still needs to be developed at the European level, and the fact that 4 months into the crisis, we're still in debates around whether to do it or not to do it, or which volume, is it grants, is it loans, clearly is something that shows that decision-making procedures in Europe are much, much slower than at the national level.
This is one of the areas that will be covered. Final agreements will come within your presidency of the European Council, which starts in just a few days' time. I'd be very interested to know what are your priorities you think you'll be focusing on over the next 6 months, and where does the recovery plan fit, and how does it work together in terms of the work you'll be doing in the financial sector in particular?
I mean, obviously, the finalization of an agreement is a massive priority for us, and especially making a very strong attempt at finalizing before the summer break is extremely important, because no one can forget that once the heads of state have agreed on something, there is a huge amount of work on specifying the details to do afterwards. And of course, as finance ministry, the ECOFIN will be a huge forum for that. So we really need to act quickly now if we want the funds to be available on the 1st of January 2021. So I think that puts us under severe time pressure, because we can't delay the response any further than early 21. The other big priority that we have, of course, being finance ministries, is financial markets. We've seen, I think, a very positive response of the banking system to the crisis. I think we can honestly say that the banking system is part of the solution to the problem, not part of the problem itself. So I think that's extremely positive. We've worked together very, very closely, both at the German and the European level, to respond quickly in terms of the guaranteed loan programs, but also in well thought out supervisory and regulatory relief to allow the continuation of lending to the real economy. I mean, that's, I think, in retrospect, maybe one of the key differences between the financial markets crisis and the current crisis. The financial market crisis led to a huge credit crunch, which sort of led to a second wave of negative response in GDP. Here, at least in Germany, we're getting the first numbers that credit provision may have actually expanded during the depths of the crisis, and that, of course, would be an enormously positive sign that the financial market rules are actually working quite well.
One of the areas that is under closest development is the whole area of digitalisation. It's a theme that has been very prominent in Germany and elsewhere. There's a very wide-ranging set of initiatives already being launched, some in consultation phase, some close to legislative proposals across the whole spectrum of issues. There'll be an action plan later in the year from the European Commission. How do you see digitalisation of the European financial services sector developing over the next year or so? And looking at the public policy role, what role do you see for regulation in developing the digital environment in Europe?
I think it's an enormously strategic topic. If you look at the competitive position of Europe versus the Americas and Asia, it's hard to say anything else than that Europe has fallen behind massively. And that is something that we urgently need to address. If a financial service provider, either established or startup, wants to launch a European business in payments, in setting up online banks, open banks, they basically need to adhere to 27 different regulatory supervisory regimes, account opening, AML, KYC, and that urgently needs to stop. I mean, we need to harmonize, we need to find common standards across Europe, because if business models aren't scalable, that lack of competitiveness will just perpetuate, because the fixed costs of launching new ideas are so much higher in Europe versus the Americas and Asia, where both the US and China are massively efficient common markets. According to the Lisbon Treaty, the European Union is supposed to be an internal market for goods and services, but the fact that we are nowhere near an internal market for services in general and financial services in particular is just a massive competitive disadvantage that European financial service providers have versus other regions of the world.
And in terms of the regulatory actions at European level, what do you think are going to be the main focus for policymakers in Europe over the next year or so?
Yeah, so I mean, we need. I mean, I mentioned KYC and AML. I think that fragmentation has to stop. We need to basically replace the D with an R in the AML directive, which gets implemented 27 different times in different ways across Europe. That needs to be a harmonized regulation. We need a European supervisor for AML. We need KYC processes to be harmonized and standardized across the EU. Then we in Germany are quite proud that we came up with a few initiatives. On the one side, we opened the APIs for systematic payments infrastructure providers at the national level, but we think that should be done at the European level to enhance competitiveness and both in terms of innovation and pricing against strong incumbents. Then we came up with, in the context of the AML directive, a regulatory framework for the custody of crypto assets. We think that could be a huge innovation drive for the blockchain community if we have rules and standards for the European Union. We are in the process of coming up with legislation for digital assets. We're starting with the fixed income markets to completely digitize the issuance, trading, custody, settlement systems for bonds. And we think that is also something that doesn't make a huge amount of sense to do only nationally, but we want to move ahead. But we really think that those are the kinds of things that need to be Europeanized urgently.
Thank you. You've spoken a number of times on the Capital Markets Union project. There's been a lot of work undertaken over the last 12 months, a new report put out by the high-level group, and everyone's eagerly awaiting the next steps from the European Commission. What is your assessment of the way forward on Capital Markets Union? What do you think needs to be different as that project takes on a new shape in a new economic environment?
It's a massively important project, and we're not losing any time. The very first ECOFIN that we're hosting on the 10th of July under our presidency will have as a core focus item the evaluation of the report by the group chaired by my good friend Thomas Wieser. The report is excellent, all 100 plus pages of it. It has a huge number of very specific examples. I think that is why this report is so strong, is instead of talking about large principles and generalistic ideas, it has 17 extremely concrete proposals ranging from settlement to supervision to AML to KYC to all of these things, to pension systems, to Solvency II. I mean, all aspects of the Capital Markets Union are covered in this paper. If you haven't read it, please do so. It's excellent reading, and it will really shape our thinking because it picks up the initiative that we took together with France and the Netherlands on next CMU, and really puts it into very, very specific proposals. And of course, we will accompany the Commission in putting those proposals into legislative work over the 6 months of our presidency. It'll be a huge priority.
Are there any elements of that agenda that you're particularly focused on, you think stand the biggest prospect for setting us on the right path in terms of creating momentum towards the Capital Markets Union project?
Yeah, I mean, I think the digital questions, everything that I mentioned about overcoming the fragmentation that we have in capital markets, the AML, this KYC procedures, at least setting a starting point for stronger pension systems. I mean, we can't continuously complain about foreign capital taking over European companies if the capital-based pension systems of Europe are so underdeveloped relative to the rest of the world. Then that phenomenon will never change. So I think we urgently need to move on those systems as well and come to more European standards. And then I think the other point that we have to explore is the complementarity of the banking union discussion with the capital markets union discussion. Because if either of those projects lag behind, then it will impede the progress of each one of them. Because I do think that we need to think very holistically about the projects of banking union and capital markets union, and really have to see them as closely interlinked sister projects that if they work together, they will positively reinforce each other, because the fundamental issue of the fragmentation and segmentation of our financial markets affects both the banking system and the capital markets system. So those are highly, highly complementary.
Thank you. We've all been working very differently, and you and your colleagues in the European institutions, policymakers have had to adapt hugely to the new working environments over the last few months. Looking at the way in which you're working and decisions are taken, how do you think, if at all, European decision-making work in the public sector might change in the year ahead, particularly if we revert back to new waves of coronavirus outbreaks? A lot of focus has been on what are the immediate things that need to be done, but is there a negative consequence for all the medium and longer term projects that also need to be progressed? How do you see the work of the European institutions, particularly given you're taking on the Council presidency, developing, and will your working methods need to change in light of the experience you've had over the last few months?
Yeah, I have to say, I don't really buy the argument that decisions by video conference don't work. I mean, we had, the longest Eurogroup ever in April to come to a deal. And just like you can have side discussions in rooms, you can have side discussions by phone. So I have to say, I'm not a buyer of the, decision processes are delayed because of video style or social distancing things. I mean, if there's a deal to be done, there's a deal to be done, and we'll find ways to do it. So I don't think that the mechanics of how meetings are run is really a first order issue. The much more important issues are the concrete questions that we have at hand. And I have to say, for our presidency, we're much more preoccupied with the question of, what are the financial market implications over the next 6 months of a Brexit deal or non-deal, than the questions of whether meetings will be had physically or by video. And the one thing that we stressed hugely at the beginning of this, and that I do think where the question of physical versus remote does matter, is one of the key issues that we have in general is with the sort of unintended negative implications of financial markets regulations on market liquidity. And we did see at the beginning of the corona crisis that the rules on work from home, especially for market making, were quite prohibitive. And quite a lot of the financial markets participants that we spoke with gave us clear illustrations of how some of the ESMA rules had to be changed to allow market making from remote destinations. I mean, when the rules were made, nobody had any idea that this was going to happen. So there's no one to be criticized for it. I would say to the contrary, ESMA and the supervisors are to be applauded that they took on board all of this concrete indications that we needed to change the market making from home rules to allow this to happen. And so in that sense, of course, that increases the flexibility now going forward of the financial market participants to accommodate work from home schemes, either because employees want that or because further outbreaks make it necessary to do more work from home.
Well, thank you very much for sharing your perspective on all these areas and for the insights, a glimpse into the planning and priorities for the German presidency that's coming up. We wish you every success and thank you again for joining us. Bye.
Many thanks. Thank you. Bye.